Norway owns part of Apple, part of Microsoft, part of Nestle, Samsung, Toyota, and Amazon. Stakes in more than 8,000 companies, listed across 44 countries, on every major exchange on Earth. Norway did not build those companies. It did not invent those products. It did not hire a single one of those employees. It simply bought them, on behalf of 5 million citizens, most of whom have no idea how much they own. Tonight, we are going to follow the money. From the oil fields of the North Sea to the portfolios of the most powerful state-owned funds the world has ever built. And by the end, you may see the word investment very differently. Today, governments around the world collectively control $13 trillion in sovereign wealth funds. Not foreign aid, not military budgets, not infrastructure spending. $13 trillion invested in private markets, global equities, real estate, and infrastructure. Quietly, continuously, without elections, without public debate, and in most cases, without your knowledge. These are the funds that own the world. Tonight, we are going to name them. A sovereign wealth fund is a state-owned investment vehicle. A government, through oil revenues, trade surpluses, or foreign exchange reserves, accumulates more capital than it immediately needs. Instead of spending it, or returning it to citizens directly, it places it into a fund. That fund is then invested, globally, across asset classes, for long-term returns. Fair, right? A savings account. For a country. But here's the twist. A savings account earns interest. A sovereign wealth fund buys ownership. Ownership of companies. Of commercial real estate in London and New York and Tokyo, of airports, of seaports, of technology infrastructure, of the debt of other governments. And unlike a pension fund or an endowment, a sovereign wealth fund answers to no shareholder. It is not listed on any exchange. It is not subject to the disclosure requirements that govern private investment firms. It exists in a category of its own, state-owned, globally deployed, and almost entirely invisible to the populations whose resources funded it. $13 trillion. Here is where it sits. Norway's government pension fund, $2.1 trillion. The largest sovereign wealth fund on Earth, built entirely from North Sea oil revenues, beginning in 1990. It owns 1.5% of every listed company on regulated exchanges globally. Not 1.5% of some companies. 1.5% of all of them. For every $100 of stock traded anywhere in the world, Norway owns a share. China operates 2 funds. The State Administration of Foreign Exchange Investment Company, $1.9 trillion. The China Investment Corporation, $1.5 trillion. Combined, $3.5 trillion of Chinese state capital deployed in global markets. Abu Dhabi Investment Authority, $1.1 trillion. The Saudi Public Investment Fund, $1.1 trillion. Kuwait Investment Authority, $1 trillion. Singapore's GIC, $936 billion. Middle Eastern sovereign funds alone exceed $5 trillion. Built on oil. Invested in the companies, infrastructure, and debt instruments of the very nations that purchase that oil. And those numbers are only the funds that disclose their assets. What does $13 trillion buy? Norway owns the Pitt Building in Cambridge, the LVMH headquarters in Paris, and retail properties across Manhattan. Its equity portfolio includes stakes in Apple, Microsoft, Alphabet, and virtually every Fortune 500 company with a public listing. Abu Dhabi's Mubadala Fund, a $385 billion arm of the UAE, owns stakes in AMD, SoftBank, and global semiconductor supply chains. Saudi Arabia's Public Investment Fund, the vehicle of Crown Prince Mohammed bin Salman, owns 15% of Uber. It has invested directly in LIV Golf, Newcastle United Football Club, and a $4 billion stake in Lucid Motors. Singapore's Temasek, $324 billion, holds ownership positions across telecommunications, banking, aviation, and energy infrastructure throughout Asia. These are not passive investors watching stock prices. They are active, patient, strategic owners with time horizons measured not in quarters, but in generations. Because the real purpose of a sovereign wealth fund is not return, it is permanence. 3 weeks ago, Canada announced the creation of its first sovereign wealth fund. The announcement generated more questions than answers. Where does the money come from? Who controls it? What does it buy? And who decides? Those questions matter because they are the same questions that were never adequately asked of the funds that already exist. Norway's fund is transparent by design. It publishes its holdings. It caps its annual withdrawals. It is, by global standards, a model of governance. Most are not. The China Investment Corporation does not publish its full portfolio. The Abu Dhabi Investment Authority discloses selectively. The Saudi Public Investment Fund operates under the direct authority of a crown prince with no independent oversight structure. $13 trillion, deployed across every major economy on earth, owned by governments, answerable to, in most cases, no one outside those governments, not subject to shareholder accountability, not subject to public disclosure requirements, not subject to the market forces that govern private capital. Internationally active, globally powerful, and almost entirely in the shadows. The world's largest investors are not BlackRock. They are not Vanguard. They are governments. And the $13 trillion they control is not invested on your behalf. It is invested on behalf of the state that holds it. The rules of global capital were not written for you to understand them. They were written to ensure that those who hold the capital continue to hold it. That's it.